Thank you so much for sitting down with me. Just to start off, a primary question of the hour has been how's the Indian consumption, urban consumption story going to pan out? How do you see it rebounding? How do you see it growing? What's your thought there?
Thanks, Akshita, for having me. It's a pretty important and probably, as we call it, multi-trillion-dollar question now. If you look at Indian economy, just to take a bit of a step back, is a consumption-driven economy. So PFCE really accounts for a large contribution to the India's GDP and GDP growth rate. So what happens with India's consumption is fundamentally a very important part of how the economy is going to do. Having said that, the last 2-3 years have not been the kindest when it comes to how the real consumption have grown net of any kind of inflation, and which is a big concern for a lot of retailers, platforms, brands alike. And then, of course, the impact trickles down to multiple other economies or industries, rather, right? So I think everyone is looking forward to how the economy is gonna, or the consumption is gonna turn around over the next couple of years. So in that context, one, I see that with the kind of demographic profile which we have, and the kind of consumption patterns which we have across these demographic profile, it's fairly commonsensical that the consumption has to grow. There are a bit of bumps which are on this journey, but directionally, if you look at it over a mid to long term, over 2 to 5 years, I don't see that there can be any reason that why the consumption won't grow in Indian market, right? As I said, two large reasons: the demographic profile and the consumption patterns which they have. So it has to grow. In a more near term, I see that considering how the last 3 years have been and the way the government's focus have been away from some other consumer-driven agendas to more of the capital-driven agendas, I do see that it's probably just about the right time where we see turnaround across the corner in the coming year or so.
And how do you see that, translating with global interest in for Indian consumption? Like, how do you see global MNCs working out in the Indian consumption sector? How do you see global investment and acquisition working out for Indian startups or domestic players there?
That's a great question. So, I think it's something which we've heard a lot often now, that India is the oasis in the turbulent global economy, and more so as we see in the current market where there have been tariff wars which is going on. Pretty much there is a unanimous view that even in this situation, India is the one which probably is expected to gain the most. So, so from a pretty much mid to long term perspective, all large companies and larger economies believe that India is a place to be, with the very healthy and high potential consumption growth. So, and with China going down and double down with the tariff issues, we're already seeing that there's quite a bit of movement of the international and large global brands towards India market. In fact, as we speak, there are a bunch of global large brands which are pretty minuscule present in India. We're working with them on helping them understand that what the India strategy has to be, or the product portfolio has to look like, how should they go about winning and crafting for Indian consumers, and they're ready to really invest big time to secure a larger pie of the Indian consumption market over the next 5 years or so.
Is there a sort of understanding that an Indian play would be more profitable or more margin accretive than their global counterparts? Like, what's the insight on that front? Do they think it's somehow more feasible that way?
I think margin is a tough one. India is known to be a bit of difficult market, but so to say that was the same for China as well when China market started opening a couple of decades back. So I think there's a bit of a correlation between what kind of a GDP per capita you get to, and beyond that, customers start becoming a lot more liberal with how much they can pay and what all products would they buy. So we're still trailing that marker. So I would say, from a margin perspective and the investments which companies would need to do to win the Indian consumers, it's not going to be easy. But as there are great case studies of Apple, it has done tremendously well in Indian market by acquiring a very significantly high share of premium mobile phones, which was probably something companies were not able to think through many years. The short answer, it's going to be a bit of a mid to long term journey. It's going to be a bit challenging on margin, but the size of the pie is pretty big one to go after.
So, and slightly on a off track, so I also want to get your thoughts on how do you see the consumer companies that have come in India, startups and like that have listed also. How do you see the rest marking their waves, IPO or if like in acquisition? Like how do you see that whole journey panning out? Any particular like a lot of startups that had plans to go public this year are currently on hold because the market is going down. So what would be your thoughts on what's stopping them? What's the wrong besides the general tariff area?
Um, uh, See, IPOs are the timing of IPO is pretty closely related to what is the volatility in the market. So while they are not listing because there's quite a high volatility in the market, but the back end, as we work with these companies, we clearly see that there's no mood or heart in the intentions of going IPO. They're getting ready, the paperwork, all the processes are in place. It's just about pressing the trigger, and the trigger will be pressed when the market is trying to jump in term, which possibly is, as most people would agree, is not the best time. So IPO intentions, companies going IPO versus how much you're seeing right now in the market, probably all three very, very different things. Companies are still very, very optimistic and they're very, very optimistic about going IPO. I don't see change in the plans.
And for India, I'd say one of the biggest IPOs like for consumer tech companies that India is expecting is Zepto. And I also want to get your thoughts on how the whole foreign investments in domestic startups, how that debate, how is that going to pan out? Like, for instance, Eternal is also moving away from like in foreign ownership to move towards more inventory model. And to survive in this space, they're looking at domestic supplements with foreign capital. Obviously, foreign capital means big bucks, and big bucks mean tax. So how do you see that panning out? Like, what's the understanding there?
Very good question. So, see, I think there's a bit of a journey which has happened here. So, 5 years back, was going 5 years back when Zepto was not public, and the the awareness and maturity of the Indian investors on the startup ecosystem was very limited, right? Which is pretty.
Give me a loud, yeah.
And so, which is pretty obvious, right? Because you would see that in global and Chinese, US and Chinese context, companies have US and Chinese context investors have played out these investments uh, and that's why they were a lot more confident of making these investments, and that led to a disproportionate representation of foreign investors in the new age companies. But now I think as things are getting matured, and you can see that there are about 20 odd companies, $100 billion plus of a market cap, which these companies have, by a larger confidence, which investors have, Indian investors have to invest.
More domestic companies.
Absolutely. And with the whole rally which we've seen over the last couple of years of retail investors, domestic investors being putting in money in the capital markets, the depth of capital is not the challenge. So I do see that it will change, and I don't think that the ideally should have a larger implication from a growth prospect. The application for companies is more about they have a better control on FDI and what they can do versus what they can't do.
Well, and just one last question. How do you, what do you see is going to be a playbook for global MNCs or even the domestic startups who's scaling in Indian consumption right now? Like, is it like catering to the areas, looking at the whole premium segment, channel listing? What sort of fun? What is the insight?
Yeah, I think the answer with both of them are a bit different. So for MNCs, I would say they're a lot more resilient. They're large, and that's what their strength is. They work with various customer profiles across many countries. So when they come to India, they have to apply the resilience in action and have the patience on understanding country demographic profiles, customer cohorts, and then go for it. India is not a market which will start giving you returns in couple of years. It personally will take a much longer. So for MNCs, understanding the market, applying the resilience, be patient would probably yield the result, but go for it. You can't go wrong with the Indian opportunity. For the G2C companies or the new age companies in India, the answer would be rather than copying what others have done, there has to be uniqueness and innovation on the problem solving which you're doing. And when you think of innovation, it need not to be a Nobel winning innovation. It could be also about a small innovations which can really make it click with the customers. Because what you realize is over the last 5 to 10 years, with the internet coming in, online commerce coming in, it's easy for brands to get to 100 CR of revenue. So that's something which is not the uniqueness of the brand. It is a uniqueness of, it's just applying the first principles on the online channels and being able to reach to the larger customers. So getting to 100 CR, great job, but I don't think that is sustainable.
1 to 10 is a bigger journey.
So from there, how do you get to the next level? And that would only happen when you have uniqueness in your approach. What are you solving for? What is the innovation? What is differentiated which you're bringing in? And yeah, that's what it is.
All right, I think that's all the questions. Thank you so much, Anil. This was really insightful. I think I had a similar conversation with Brigam who said, a lot of the first thought question that investors are struggling upon is why different? If tomorrow, 2 years later, there's a different brand that wants to stop you from scaling.
Yes.
Sort of thing. So, is there a sort of investors are also concerned, hesitating to back the company that's just a me too of others in the plate? For instance, BPC is notorious for this. Every minimalist, ordinary, and then 3 others. So
great question. So I think the challenge in this context is how do you differentiate the fad from innovation? And right, so whenever we talk about D2C brands and various consumer brands, we always, and the toughest question is how can you differentiate a fad from a innovation? Because fads would have a shelf life of maybe a year or 2 years, and I don't want to name the brands, but all of us have seen that they just became very big. Everyone was talking about them, and they fell off the cliff from there. A sustainability of that hook with the customer is a key thing. So, from investors' point of view, that's a big question. The way the smart investors are going about it is if they find the answer to be yes, that no, this is not a fad, this is innovation, they will go for it. And if they don't find the answer or they find the answer negative, in both the cases, they will not make the investment. So, ability to sort of get the yes for the innovation versus fad is the key.
That's pretty cool. Keep that in mind.
Thank you very much.